please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Your Stocks. I'm Nigel D'Souza. With me is Ekta Batra, and in fact it's looking like a good start to the week. It's a Monday afternoon, and in fact stocks are moving higher. Axis Bank is one stock that's moved up on the back of favorable results, but TCS, that's trading at a lifetime high. And just take a look at the dream run we're seeing on the stock. Remember, just last year the stock had drifted down to around 2,150. From there, in fact, forget what's happened on the index, what's happened on mid-cap stocks. TCS, this large cap, it's given you close to around 50% returns in the last 1 year or so. And today, in fact, it's up by close to around 5%. So that stock is moving very, very well. But we had a couple of numbers that came out as well in the last few minutes. Havells, they came out with a set of numbers. Well, on the top line, the growth was quite good. We were working with a growth of around 30%. Yes, it came in at around 30.5%. Even in terms of, if you look at the margins, well, it came in at around 13.5%. So that was pretty good as well. Remember, this time around, why are we seeing such a big growth on the top line? Because these numbers, they do include, that Lloyd acquisition. And Lloyd acquisition in this past quarter contributed roughly around 293 crores. Now that's looking quite good actually, because in the same quarter, the previous quarter, we don't have it on a year-on-year basis, but on a sequential basis, it compares with around 270 crores. So 293 crores, that's pretty good going. Unfortunately, on the margin front, the EBIT margin appears that pricing pressure is there. Maybe some raw material costs as well have gone up, because the EBIT of Lloyd Consumer has come in at around 48 crores. That compares with around 53 crores on a sequential basis. So more or less in line with what we're working with. Margins, we were expecting at around 13%. It's coming at around 13.3% as well. Yeah,
Hi Nigel. Yes, absolutely. So for Havells, maybe the internals in terms of what exactly the company would be saying going forward would be something that we would be looking at quite closely. But otherwise, it's okay in terms of its performance. It's largely in line. You can see that the stock has been reacting quite positively to it. Switchgears business up, adjusted for excise, is up 11%. Cables up 3% Lighting and fixtures, which is up 21%. It has been a growth driver before and has really led in terms of growth this time. And electrical consumer business, consumer durables business, is up 33% adjusted for excise this time. We'll do one thing. We're going to take a break now, but before that, on a quick programming note, ahead of the union budget, CNBC TV, well, we have the Divan housing numbers which have come in. That is the revenue, which is up around 11.4%. Generally, NBFCs have a different way of calculating in terms of NII, and that comes with a lag with the company presentation. But the profit figure is something that we can work with, and that is, I think, better than expectations. Let's just bring up the profit figure again. 25% growth is what the company has recorded this time round. Disbursements are very strong as well, but remember that they have been tracking with a 50% growth in terms of disbursements, so that continues to gain. 25% growth is 306 odd crores versus 245 odd crores, and we had Motilal estimates with us, which was estimating around 300 odd crores. So it's a tad better than what Motilal's estimates were, at least on the profit figure. Now disbursements up 54%. Compare this to disbursements which were up 50.6% last quarter. And we also had another parameter which came up for you in terms of the sanctions, which are up around 70% on a year-on-year basis. So that also continues to track in terms of the growth that we've seen last quarter. Last quarter it was up around 68%. This quarter it's up around 70 odd percent. We're waiting by for more of the details, but like you can see, the loan growth, the kind of trajectory that they have in terms of sanctions and disbursements continues for Divan Housing, and the profit is a tad better than estimates as well. So all those parameters are working well for Divan Housing. Let's see. Last quarter, their gross NPAs were very benign. It was at around 0.96%. They have been maintaining these kind of gross NPAs. So I'm assuming that that's probably going to continue. So those would be certain parameters or factors that we need to watch out for. Again, that's going to come with a lag. But that's all the time that we have on the show. Couldn't take any queries, but do remember that you can keep sending us all of your queries, and we're going to take them up as the week goes along. Thanks very much for watching. Closing bell up next.
down about 0.25% for the Nikkei. The Korean markets, they are actually lower. budget deficit of India is still large at the central level, but also you have fiscal problem at the state and local level, and therefore fiscal prudence is necessary.
IT is doing well, and old economy heavyweights like ITC, Larsen, Reliance, all of them are firing.
Jamnagar is now the largest integrated refining petrochemical site in the world.
A positive start, just a mild green, 10 points higher on the Nifty, 73 higher on the Sensex.
Across consumption segments, we have seen uptick in volumes, and we are going to see more of that as we go ahead.
Yes, there is a lot of synergy between MRPL and HPCL. Going forward, we can look at different options.
We look at risk management, and Rui is the boss. IPOs don't figure into it.
We have close to around 125 crore plus of order book as on date.
We've come off a tad actually from the high point of trade, but the Nifty is still holding on to the 10,900 odd mark. The gross NPA is 5.28%. The net NPA has come in at 2.56%. So in terms of the gross NPA, it has come down.
Another good day for the market, and that move towards 11,000 on the Nifty and, of course, higher levels on the Sensex is continuing. This is Closing Bell. I'm Anuj, with me Surabhi. Hi Surabhi, good afternoon.
Good afternoon, Anuj. Bulls not finding any reason to complain, are they? I mean, I guess the results that have come so far, what we've seen from Axis, Havells. So what do you make of the action today?
You know, Reliance and TCS,
Surabhi,
the two biggest stocks. You know, when the biggest stocks start to move, the markets move. And, you know, we discussed this in the morning as well. It looks now a matter of time before you have that 11,000 mark. Momentum is with the bulls. This is expiry week. Expiry week is all about momentum. What happens in markets like these is that all intraday dips are being used to buy. And, you know, a lot of shorts would have been taken to cleaners. You know, when you start expiry week, you look at your shorts and see what to do. You know, with the market at all-time high, you obviously cover, and that's what's happening. And this fresh buying as well. I think the move in TCS, though the entire day has been spent, you know, talking about Axis, talking about a couple of other stocks, even Reliance. For me, the move in TCS today is humongous. I mean, the largest IT stock, you know, when we're talking about mid-cap IT stock, the largest IT stock moving like this would be adding, you know, maybe, you know, 50,000-60,000 crore its market cap.
Move,
you know, today it's added a couple of companies in its market cap. It's been that kind of move in TCS. So I think it's just phenomenal the way the market is moving. And once again, the message is clear that you buy the dips, you make money. Just that oil and gas today, because of that ONGC HPCL deal, that sentiment got a bit vitiated. But otherwise, just all guns blazing for the bulls.
Yeah, absolutely, and it's actually much better because global cues have been very, very indifferent. I mean, European markets aren't doing much right now.
Yourself in this last hour of trade, we have Ashwini Gujral and Mitesh Thakkar now joining us with closing strategies. Good afternoon. Ashwini, you were talking about this move in Axis in particular, that you know, maybe it was factoring in something. We have now seen that move. Your thoughts on the stock, the last hour trade perhaps now, and what would be your stock calls?
Well, if informed investors bought at 530, obviously, you know, the results were going to improve. So that's kind of, you know, common sense thinking. But I believe that Axis Bank, the rally has just started. It will close at the highs of the day. Tomorrow, 4 brokerages will upgrade it. Hence, it will open another 4 or 5%. So Axis will make up for its lost time. So that's what people need to keep in mind and hold on if they have long positions, because it was almost forgotten as a private bank. So I would think that it will cover a lot of ground over the next couple of days. Having said that, United Breweries a buy with a stop of 1140, target of 1185. Sonata is a buy with a stop of 306, target of 324. And Capital First is a buy with a stop of 765, target of 790.
Okay, so lots of buys on Ashwini's list. Lots of stocks moving higher. I mean, we were just talking about HOAC in the headlines as well. That stock's almost 10% higher now. So good earnings, getting rewarded very handsomely. Well, Mitesh Thakkar with us also this afternoon. As always, good afternoon, Mitesh. What is your reading? We're looking good now in the second half, aren't we?
Very much. I think, you know, as Anuj was highlighting, two of the biggest companies, TCS and Reliance, moving very, very strongly. In fact, I do have Reliance as one of my recommendations. That's a buy with a stop at 949, and the short-term target should be closer to about 1020 here. And the other one is a mid-cap IT stock, and that's been the flavor for the last few weeks. Majesco is just giving signs of a breakout, so That's a buy with a stop at 544. Look for targets of 590.
Okay, so Ashwini, for the last hour on the index, what should be the approach? Because as we speak, we are, once again making a move towards the high point, but it's of course been more measured today.
See, this week will be more measured than last week. So, but it's clear if TCS, Reliance, and by rotation other, large caps. I think Axis is also a index mover. So this way you will have, these 3 or 4 strong movers which will keep the index higher. But a lot of stocks are correcting also because you have only 910 advances to about 729 declines. But this week will be a narrower week and more sideways than last week. But overall the bias should be up. All declines should be used to buy.
By the way, there are more stocks popping up on the screens. Let's just pull up Biocon. Maybe we can get up a BHEL as well. Havells, of course, after numbers has been doing well. So there's lots of excitement, a lot of flair in the mid-cap market as well. But Anuj, the one stock that really caught me completely baffled was Group Finance. We were talking about it last week and the huge move. And the numbers seemed good. And now it's down almost 12-13%. I don't know, market's own ways.
It rallied 35% before
That's
that.
True.
2 days we were talking about it, Surabhi. It's all about, how you're going into the numbers. You're pricing in, and it's the most expensive stock. Let's not forget that. It's actually, I think it's even more expensive than HDFC. It became after those 2 days of rally. So it's all about market positioning. Axis today, it was all about positioning. You
didn't
went
go
into
in
the numbers
very heavy.
Exactly. You went into the numbers with absolutely nothing, in terms of expectations, and that's what you've seen with Axis Bank. Earnings season will be about, what kind of, or you come out with numbers like Jubilant, where you come out with such a blockbuster that you have to just rewrite the estimates across the board, and the last remaining bear also becomes a bull. Either you have to do that, or if you can't do that, in that case the positioning is such that you will see profit taking.